Hello, welcome to Investment Friend. Today we will take the information about Mirae Asset Focused Fund. See, what happens is that in case of focused fund, let us first understand what is a focused fund. Here what happens, this is a type of flexi cap fund only where the fund manager gets all the freedom to invest across the market cap. Like he has got freedom to invest in large cap, invest in mid cap or small cap, whatever percentage he wants to invest about these funds, he has got the full freedom. The way he has got the freedom in flexi cap also. The only condition in case of a focus fund is that he cannot exceed 30 stocks. So 30 is the maximum cap of the shares which the fund manager can choose for investment purposes, and that is why this category is called as a focus fund. That is as per the SEBI classification of mutual fund schemes. So here what happens is that in case of other schemes, the number of scripts might be 50, 60, 70 depending on the choice of the fund manager. So obviously there the concentration of the investment in a particular script is very less. Whereas here, since there is a cap of only 30 stocks, obviously the amount of investment in a particular script is always more, because the entire fund has to be invested only in the basket of 30 stocks. So that way what happens is that first of all the fund manager has to use more skills to take a call about a particular stock, because even a slightest variation in the performance of that stock can have some sort of a sizable effect on the NAV. Because suppose, for example, he has chosen a stock which has got a weightage of about say 5 or 6%. So even if one or two such stocks do not perform better as compared to others, or they do not perform to a desired extent, we can say, in that case that 10% holding of that scheme itself can have a sort of effect on the performance of the overall fund. So he has to choose these scripts very carefully. That is the first aspect. Secondly, as I said, because there is a concentration, the performance of one or two scripts will have a will have a major effect, a sort of major effect as compared to other schemes rather, on the NAV of the fund. So if one or two funds perform really good, yes, it will be reflected positively in the NAV. If one or two stocks do not perform to that extent, it will have some effect on the NAV performance of the scheme. So that way the focus category is carved out of flexi cap category as per SEBI's directions. This now will this is as far as the concept of focused fund. Now we will discuss about the Mirae Asset Focused Fund. This fund was launched on 14th May 2019. So there is only a period of say about less than even 2.5 years have elapsed since the launching of this fund. This is too short a period to judge any fund as such, but nonetheless the performance is relatively good. And what happens is that as per this value research or Morningstar, whoever are the rating agencies, they normally give rating to the funds which have completed 3 years. And some of the investment advisors also suggest the funds which have got some kind of rating or some good rating is there. So that way this fund may not be known to many people. That's the reason of selecting this fund. This is not at all a recommendation. I am not a SEBI registered investment advisor. But as I said that the performance appears to be good. That's why I said let me just share the information about this fund. So as I said, in 2019 this was launched. Thereafter, since launch, as per value research data, since launching of the scheme, this fund has returned almost 36% CAGR, which is really good in my opinion. And last 1 year's performance is approximately 65%. So that way, if you see the slide which I am sharing on the screen, the performance of this fund has beaten the benchmark index also, as well as the category average also. So that way the fund manager's skills appears to be good as such. Secondly, the expense ratio of this fund is really low. As far as the direct plan is concerned, it is only 0.36%. So as I explained in my another video, naturally when the direct plan expenses are low, the chances of accumulation of your corpus is more because of the lesser fund expense ratio. So that is another point to be noted. The third aspect of this fund is the stock mix. See this fund, if you see this stock mix of this fund, it is 70-30. 70% they have invested in large and giant companies, and 30% they have invested in mid cap and small cap as such. So the effect of this stock mix is that this large cap and giant cap companies normally give you a stability to the portfolio because the volatility is that way very less as compared to mid cap and small cap. But at the same time, the mid cap and small cap can give you more returns. Of course, the risks are also more there, no doubt about it. But they can generate more returns as compared to large caps because the scope for compounding is always much more in the case of mid cap and small cap because of the base effect. So that is why here what it appears that because of the stock mix and because of his stock picking skills, the fund manager's stock picking skills, the performance appears to be very good, because as we have seen in less than 2.5 years the NAV has more than doubled, which is really a good performance in my opinion. If you see the sector-wise allocation of the scheme, they have chosen the maximum allocation to financial stocks, followed by technology, and then the energy sector. As we are aware that India is fast approaching the developed economy tag as such. So here these sectors are what we can call it as sunrise sectors, because as the economy grow, the finance sector will also grow. The technology is the buzzword nowadays, and energy sector, energy needs for the economy also will increase. So obviously that sector is also expected to grow. So from that angle, it appears, because more than 50% of the schemes funds are allocated to these three sectors. So it is a conscious call taken by the fund manager as such. So from that angle, it appears to be a good bet. But of course, this is not a recommendation. If you are interested in this scheme, you can study more. If you are comfortable, you can take a direct route. If not, if you still want to go ahead with the regular plan, in that case you can take the fund from your distributor, or there is another way of doing this. You can take an expert advice from a registered investment advisor, and if he recommends, in that case you can choose this fund. This video is basically for academic purpose. If you have liked this video, please press the like button. If you are not subscribed so far, please subscribe the channel and also share so that others can also get the benefit of this information. Thank you very much. Goodbye. Sriram.